Hey, what's up everybody? Welcome back to The Wealthy Sailor. I am John, and this is the channel you come to if you want to talk about things like business or finance or making money or budgeting, whatever. I talk about all of that, so get ready because here we go. So today I come to work and I have a couple guys that we all talk about investing pretty much all day because we're deployed and that's what we talk about. Well, during the course of this conversation, one of them mentioned that he gets 33% dividends on the stock that he's invested in. And I'm like, okay, that's a scam. And he's like, I didn't even explain it. I'm like, nope, you don't have to. It's a scam. Like, you're not getting 33% dividends. That would mean that you double your initial investment every like 3 years, which means it's like the best kept secret of Wall Street. So it's not happening. I don't know what you're actually getting, but it's not that. But the thing is, I don't like leaving things like that. Like, I like to know exactly why something's bad or why something's good. So after I thought about it for a minute, I'm like, okay, well, tell me about this stock. And he told me what the name of it was. It's called Great Elm Capital, and it was started back in 2004. So automatically, I'm like, okay, well, that's a long time. Admittedly, it hasn't been publicly traded since 2004, though. They started getting publicly traded back in 2017, 2016, that time frame. And it's a company that provides financial packages, and they help pretty much private investors find private things to invest in, like real estate and stuff like that. Now, the way they make their money is that they offer certain loans and stuff like that for this. So they collect money based on long-term loans. In fact, I looked up their cash flow, and 100% of their profits all come from long-term debt. Now, they mainly provide two types of financial services. One's the long-term debt thing I was just talking about, and another one's an advisory thing. I couldn't really find how much money they comes from the advisory section of their business. It seems like almost all of it comes from the financial services section. So the total market cap of the company is actually $57 million, which is actually not that big for a publicly traded company, but still not bad. So, so far I'm looking at the company's not looking bad, really. Now, I do want to point out that for a company that started in 2004 and it to be a financial service company that mainly focuses on real estate and then survived the 2008 recession, that is a plus in my column. I think that it has to be run particularly well in order to survive that. So I'm like, okay, that's pretty good. But still, 33% dividends, that's weird. That's too much. And then I was reminded that dividends aren't measured in a percentage. Companies come up with a dollar amount they're going to provide per share. So that's when I figured it out. They don't give you 33% dividends. They give you $1 per share. But this year, their stock price plummeted. It went from about $5.50 a share to below $3 a share, to about like a $2.90, I think, when I'm making this video. So $1 a share actually is 33%. Now, it went down because the underlying properties that they own went down. Their current market cap went down. Their total valuation went down. So they're still offering the dollar per share per year, but it looks like it's more because the stock's so cheap, which isn't bad because this company is also pays monthly dividends, so that's not bad at all. So also, they make a point that their total dividend spending is like 93% of their revenue is sent out as dividends, which is amazing. That's better than most REITs. So that's really good. So if you're thinking about looking at this company, the stock ticker is GECC. I'd like to remind everybody, I'm not a professional at this. I'm just a guy on YouTube, entertainment purposes only. Do not take this as you should or should not invest. This is meant to pique your interest so you go out and research your own investments and stuff like that. And the last thing I want to mention with this company is that I think it's a little new, but since it's been publicly traded, it has never missed a dividend thing. Now, it's only been like 4 years, so, but for a company that pays monthly dividends and not missing any of them, that's a lot. That's 48 payments. Now, keep in mind, a company that's giving quarterly would need 12 years to come up with the same record. So I do think that's worth something to look at. So I'm not sure if I'm going to invest in this company or not, but I want to point it out to you because it's something I just found out and I want to make a video and just talk about it for a little bit. So this is going to be a short video, and that's pretty much it. Let me know what you guys think. Do your own research, comment below so we can help the community out in their future investment goals. Anyway, guys, thank you for watching and keep saving.